What if you could save $50,000 or $100,000 or even $200,000 in taxes this year and build massive retirement wealth? If you own an S-Corp and your income is climbing, today I'll show you 4 of the best retirement strategies that all business owners should know about. I'm Stephen Lee, a CPA and CPWA. On this channel, I help business owners like you keep more of what you earn and build smart wealth. Today, we're covering 4 strategies that can completely change your retirement and tax savings. I'll also share details about my upcoming Business Owner Bootcamp in October, where we'll dive deep into strategies like these with hands-on examples. Once your income passes $100,000, it is essential to know about the tax saving strategies available to you. Retirement plans provide a massive savings opportunities for you as a business owner. Let's start with the solo 401k. And this is basically a one participant 401k. Eligibility, available to self-employed individuals or business owners, including S-Corp shareholders with no full-time employees other than the owner or spouse. Employee deferral limits for 2025 is up to $23,500 in elective deferrals. If you're over age 50, you can contribute an additional $7,500 as a catch-up contribution for a total of $31,000. There's also an employer contribution limit, which is 25% of the compensation as an employer non-elective contribution. The total contribution limit, employee plus employer, can be up to $70,000 for 2025. Compensation cap, only the first $350,000 of compensation or salary can be considered for contribution in 2025. The tax treatment, contributions are generally deductible by the S-Corp. Elective deferrals reduce the shareholder's W-2 wages, subject to federal income tax as well as state income taxes. The solo 401k is a great option for you if you're a business owner with no employees, or if it's just you and your spouse. Number 2 is the SEP IRA, also known as a simplified employee pension plan. Any business, including an S-Corp, must cover all eligible employees, including the shareholder employee. So this is also a plan where if you have employees that's not yourself or your spouse, the SEP also has to cover them. The contribution limit for 2025 is going to be up to 25% of your compensation, capped at $70,000 per participant. You can deduct up to $70,000 from your tax return, which is massive tax savings for many of you. The compensation cap is only on the first $350,000 of compensation, just like the solo 401k we just talked about. There's no employee deferral, so only employer contributions are allowed. And the tax treatment is contributions are deductible by the S-Corp. Number 3 is the mega Backdoor Roth, also through the solo 401k plan. Eligibility requires a 401k plan that allows after-tax contributions and in-service withdrawals or conversions to a Roth account. How it works: after making the maximum employee deferral, that's $23,500 or $31,000 for those of you who are 50 years or older, and employer contributions, the plan allows additional after-tax contributions up to the overall 401k annual addition limit. That's $70,000 for 2025, including all employee and employer contributions. After-tax contributions can be converted to a Roth 401k or rolled over to a Roth IRA, allowing significant Roth savings or tax savings beyond the standard Roth IRA limits. Remember, not all 401k plans offer this feature, so have your plan administrator make sure you design this the correct way. The 4th and very powerful retirement plan is called the cash balance plan, or sometimes known as a defined benefit plan. The eligibility is S-Corps can establish cash balance plan, often in combination with a 401k or profit sharing plan, to allow for much higher tax deferred contributions, especially for older owners. The contribution limits for 2025. The annual benefit limit is $280,000. That's the maximum annual benefit payable at retirement, but annual contributions are actually determined by an actuarial study and can exceed defined contribution plan limits, especially for older participants. The tax treatment here, contributions are deductible by the S-Corp, subject to minimum funding requirements and actuarial calculations. So you're going to need an actuarial study and a plan administrator to do this. You can't do this one on your own, but the tax savings are massive depending on your age net income and depending on your salary. So you definitely don't want to overlook this one. So what are the 5 action steps that I recommend here? Number 1 is review your current W-2 salary and contributions. Number 2 is decide how much you want to save annually. Number 3 is partner with a CPA or a retirement plan specialist. Number 4 is compare the costs versus the tax savings of doing these retirement strategies. Number 5 is implement before year-end deadlines, right? December 31st, you want to have these conversations with your CPA or reach out to us to have these conversations. If this feels overwhelming and you're not alone, I'd love to walk you through this step by step. I'm running a business owner bootcamp starting this October. It's 5 live interactive sessions where you and I will walk through advanced tax planning strategies, reasonable compensation, retirement strategies like these, and entity structure. We'll calculate quarterly estimated tax payments, and I'll teach you how to calculate that accurately. And you'll leave with a personalized tax and wealth plan that you can actually use. Spots are limited, so check the link below and apply now. Some of the biggest mistakes that I see is business owners wait too long to set up these plans, or they pay themselves little or no W-2 salary. So you're probably leaving money on the table right now. These 4 retirement plans can save you tens of thousands in taxes while building massive retirement wealth. And don't forget, the bootcamp starts in October. Check out the link in the description below and join me for a 5-session personalized tax plan. Until next time, plan smart and save more in taxes.